Are you looking for a way to grow your money without spending hours glued to market news and stock charts? You're not alone. The idea of passive investing, putting your money to work and letting it grow over time with minimal effort, is incredibly appealing. But where do you even begin? That's the million-dollar question, isn't it? In the ever-evolving landscape of personal finance, two names consistently pop up when the conversation turns to effortless investing: Acorns and Wealthfront. Both platforms promise to simplify the process, automate your investments, and help you build wealth for the future. But here's the real question you're probably asking: which one is actually better for you and your specific financial goals? Is one truly superior when it comes to passive investing, or are they simply different tools catering to different needs? In this in-depth exploration, we're going to dive deep into the core features, fee structures, investment strategies, and overall user experience of Acorns and Wealthfront. We'll dissect what makes each platform unique, highlight their strengths and weaknesses, and ultimately help you make an informed decision about which one might be the perfect autopilot for your investment journey. Think of it this way: imagine you want to grow a beautiful garden. You could meticulously research every plant, till the soil perfectly, and water it daily yourself. That's a more active approach to investing. Or, you could set up an automated irrigation system and choose hardy, low-maintenance plants that thrive with minimal intervention. That's the essence of passive investing. Acorns and Wealthfront are like different types of automated gardening systems. Before we get into the nitty-gritty, let's quickly define what passive investing actually entails. At its heart, it's a long-term investment strategy focused on building wealth gradually by investing in a diversified portfolio of assets, typically through index funds or ETFs, exchange-traded funds. The key is to buy and hold, minimizing trading activity and letting the power of compounding work its magic over time. This approach generally involves lower fees and less emotional decision-making compared to active trading. Now, let's shine a spotlight on our first contender, Acorns. Acorns has gained significant popularity, particularly among younger investors and those new to the world of finance, for its user-friendly interface and its unique roundups feature. Imagine this: you make an everyday purchase, say a cup of coffee for $3.75. Acorns can automatically round that purchase up to the nearest dollar, taking that spare change, in this case, 25 cents, and investing it for you. It's like saving without even really thinking about it. Beyond roundups, Acorns also allows for recurring investments, where you can set up automatic transfers of a fixed amount of money on a daily, weekly, or monthly basis. This set-it-and-forget-it approach is a cornerstone of passive investing. When it comes to how your money is actually invested, Acorns offers a selection of pre-built, diversified portfolios constructed using low-cost ETFs. These portfolios are categorized by risk level, ranging from conservative to aggressive. As you sign up, Acorns will ask you about your financial goals, time horizon, and risk tolerance to recommend a suitable portfolio. This takes the guesswork out of asset allocation for beginners. The ETFs within these portfolios typically cover a broad range of asset classes, including stocks and bonds, aiming for diversification to mitigate risk. The specific ETFs used and their allocation will depend on the risk profile you choose. For instance, a more aggressive portfolio might have a higher allocation to stocks, which have the potential for higher returns but also come with greater volatility, while a conservative portfolio would lean more towards bonds, which are generally less volatile but offer lower potential returns. Acorns also offers different subscription tiers, each with its own features and fee structure. The base tier, often called Acorns Invest, primarily focuses on the roundups and automated investing features and typically comes with a small monthly fee. Higher tiers might include additional features like retirement accounts, Acorns Later, and checking accounts, Acorns Spend. It's crucial to understand these different tiers and their associated costs to determine which one aligns best with your needs. Now, let's turn our attention to our second contender, Wealthfront. Wealthfront is often categorized as a robo-advisor, a digital platform that provides automated investment management services. Like Acorns, Wealthfront aims to simplify investing through automation and diversification. However, it generally caters to investors who are looking for a more comprehensive and sophisticated approach to wealth management. One of Wealthfront's key strengths lies in its sophisticated algorithms and tax-efficient investment strategies. They utilize what's known as tax loss harvesting, a strategy that involves selling losing investments to offset capital gains taxes, potentially increasing your after-tax returns. This is a significant advantage, especially for investors with larger taxable accounts. Wealthfront also offers a wider range of investment options compared to Acorns. While they primarily use ETFs to build diversified portfolios, they often incorporate a broader selection of asset classes, including U.S. stocks, foreign stocks, emerging market stocks, dividend-paying stocks, real estate, natural resources, and bonds. This allows for even greater diversification and the potential to tailor portfolios more specifically to individual needs and goals. Similar to Acorns, Wealthfront builds portfolios based on your risk tolerance and financial goals, which are assessed through an initial questionnaire. Their algorithms then continuously monitor and rebalance your portfolio to maintain your desired asset allocation. This automated rebalancing ensures that your portfolio stays aligned with your long-term strategy, even as market conditions change. Wealthfront's fee structure is typically a percentage of the assets under management, AUM. This means you pay a small annual fee based on the total value of your investments with them. This fee structure can be more cost-effective for larger account balances compared to Acorns' flat monthly fees, especially as your portfolio grows. Wealthfront also offers additional features beyond basic investment management, such as financial planning tools and the ability to set specific financial goals, like buying a home or saving for retirement. These features can provide a more holistic view of your financial situation and help you stay on track to achieve your long-term objectives. So, we've looked at the individual strengths of Acorns and Wealthfront. Now comes the crucial part: how do they stack up against each other specifically for passive investing? Ease of use and accessibility. Acorns likely takes the crown in terms of sheer simplicity and accessibility, especially for beginners. The roundups feature is incredibly intuitive and makes investing feel almost effortless. The user interface is clean, straightforward, and easy to navigate, even for those with limited financial knowledge. The low initial investment threshold also makes it accessible to a wide range of individuals. With that said, thanks for watching, and until next time.